Hello and welcome to Blythe Ray Business News. We're welcoming back today Jay Cheatham, Chief Executive of Pantheon Resources. Pantheon, listed in London on the AIM market with a market capitalisation of around £821 million, but also now listed on the OTCQX market, which is the highest rated OTC market for North American investors. Jay, welcome back on the programme. I'm going to start with I guess, a provocative, controversial question. You and some of your fellow directors recently announced you'd sold some shares. Why now?
Well, Tim, just a little color to that, the company's been around for 16 years, and during that time period, only one director has sold any shares. I've been around 14 years. This is the first time I've sold any shares. So, we've been here a long time. Also, as you know, directors can only sell shares during certain time periods. And we made a concerted decision that this was a good time period. Lots of people were saying, well, why didn't you wait until after the flow test? And we determined two things. One, we could easily be in a closed period if we were in some advanced discussions with anyone after the flow test. Secondly, if we were out raising capital after the flow test and we had just sold shares, we would try to explain to a prospective investor why we had sold shares and they should buy shares. So the timing was good for us now, Tim.
Now, Jay, I don't want to pry into your personal finances, none of your fellow directors, but is it fair to assume you've sold some shares, but you've still retained shareholding in Pantheon?
Yeah, Tim. Well, when you look at all of my holdings, and it's true for Justin and Bob as well, this sale was way less than 10% of my overall holdings. We've all contributed greatly to the company. All of the fundraisings we've contributed to. So yes, this is just a small percentage of our holdings.
Okay, well, thanks for explaining that. Let's move on, but I'm still going to keep on sticking it to you a little bit, I'm afraid. Overnight, there's been news that Pantheon is going to be engaged in some flaring of gas. Now, as we sit here, I'm sure shareholders and people not that closely involved with the industry hear about flaring of gas, thought this is something which was abolished many years ago and doesn't fit well with anyone's green credentials. So what's going on? Why is Pantheon flaring gas?
Well, Tim, flaring on the North Slope is normal. It's always done during the testing period, and this is going to plan. And the AOGCC regs state that you can flare during your testing program. Now, for us, we're on gravel, and to the best of our knowledge, we believe we are the first people in first company in about 40 years, we can't find any others, that is going to test a new reservoir from gravel. Everyone else does it from ice. So AOGCC doesn't have to make a determination on how long the test period is because it will end when the ice melts. So the AOGCC regs, as I said, state that you can flare during testing. And we have had extended discussions with them about our testing program. So we need to determine if the reservoir is economic. And that includes getting the initial production rate, the decline curve. We have to determine, what does the decline curve look like, and the gas oil ratio. And all three things will determine the length of time for the testing. And we will have ongoing discussions with AOGCC during that time period. So it's part of the normal process. And the hearing and the determination when testing ends will not end our production because, we are already thinking about what do we do post testing. And some of those possibilities are re-injecting the gas into the reservoir or doing compressed natural gas and selling the compressed natural gas. Already, we will generate electricity with the gas we produce. So we have upgraded the facilities that are right now going in place on the gravel pad, and so we're well on the way. And this is just, we're running through the standard procedures, Tim. That's really what we're doing.
Okay, so I get that the flaring of the gas, therefore, is just a normal thing you would do during testing and will not be something you do in production. But I've got to ask you, even though it's a finite period, the testing period where you're flaring, is there no alternate to flaring the gas?
Well, during the testing period, there isn't, but that's what we will determine is what will we do with the gas long term. And that we will decide during this testing period, Tim. And, you know, at the end of the testing period, we believe we'll be ready to continue with our alternative of either compressed natural gas, re-injecting, or if the gas oil ratio is such, we will use all of the produced gas to generate electricity on site, which we're already set up to do because we have a turbine as part of our production facilities.
Okay, let's move on. Let's move on to something more positive in that case. Thank you for being so clear on those two issues, by the way. Thank you so much. Let's just talk about the operations on the North Slope and give us an update on where you are, please.
Okay, well, Tim, once again, everything has gone to plan. And of course, we announced that we had drilled a plus 5,000 foot lateral and that we were going into the completion stage, which would require about 30 individual frac stages. And those are much more difficult in a horizontal well and require more thought and process on the North Slope. So let me just give you an example. So the first stage is really fairly easy, but it's a horizontal well. The tools that you use for perforating are not going to fall down through that horizontal. So you have to be able to pump those tools to where you want to perforate. So you go in and you perforate in the toe, and then we pump the tools down and perforate an interval about 170 feet plus or minus, and then we do the frac. And we're putting in about 250,000 pounds of sand in each frac stage and about 5,000 barrels of water, or a little more than that, which is around 225,000, 230,000 US gallons. But then we've got these perforations open, so we have to isolate that lowest zone. So then we pump down a plug, but the plug has to have a hole in it so we can pump the guns down to perforate the next level. So we pump the guns down, pull the guns out, we pump a little ball down in advance of the frac. It seals in that plug, and then we can perform the frac job. But you can imagine that plus moving the amount of sand. We're limited to fracking during daylight. So we move the sand overnight. It's about 250,000 pounds per stage. You know, if you do 2 stages in a day, that's 500,000 pounds of sand. And all that water, it's a really, really huge process.
Jay, I love the way you explain this complex engineering and still manage to work in the phrase pumping the gunge. But
guns. They're the
guns.
Perforating guns, not guns. The perforating guns that perforate the holes through the casing. I'm glad you clarified that, because I didn't want people to think we were pumping grunge. It's the perforating guns that we have to pump down so we can perforate for the next stage, and then, you know, isolate the previous stage and frac where we want to in that 5,000 foot interval. And we're going to, you know, wash and repeat approximately 30 times.
Thank you. Even more clarity. I'm glad I'm now understanding it. Now you've got some flow testing as well coming up. When do you expect that to start?
We expect flow testing to start, the flow back to start in the first part of October, Tim. And of course, with all of the water, the frac fluid that we're pumping in, we're not sure exactly how long it will take to get the frac fluid back. Normally, you start seeing oil production at about 2/3 of the frac fluid back, but this is new. We'll determine it. So we would expect absolute oil rates toward the end, second half toward the end of October.
All right. And
that
then
we can report.
going beyond October into winter, any plans yet you can share with us for winter 2022-23?
Well, of course, as we talked about earlier, we need to look and see what the IP and the decline rates are, part of the AOGCC discussion, and we will determine what our winter program is after we have a better idea of the flow rates from the Alkaid number 2 well. So we're very confident, Tim.
Well, Jay, thanks for that. Thanks for the update. Thanks for being so open and transparent. That was Jay Cheatham, Chief Executive of Pantheon Resources. As I said at the start of the segment, Pantheon listed now on AIM in London and also the OTCQX market in North America. That's it from this edition of Blythe Ray Business News. Thanks for watching.